the Money Show. I'm Kavita Thapliyal and today is the Money Show special. Today we focus on a crisis that has quietly crept into thousands of Indian homes, a crisis that doesn't make headlines like inflation or interest rate, but hits families just as hard, sometimes even harder. The Indian Rupee, that's right, a currency that not long ago slipped past the psychological 90 mark against the US dollar, a level many believe we would never see. Hence, then, yes, the rupee has pulled back slightly from record lows, offering some relief. But for Indian students studying abroad and for parents funding those dreams, the damage is already done. Because when the rupee falls for an education, doesn't just become expensive, it becomes emotionally, financially exhausting. A medical student in the US, an engineering aspirant in Canada, a management student in the UK, for each of them, their fee structure may be in dollars or pounds, but the burden is paid in rupees, and every single dip in the rupee quietly adds lakhs to the family's balance sheet without warning, without negotiation. So today, we will show you how a 1 rupee fall can add over a lakh of extra cost every year. We will show you why education loans are getting bigger, why EMIs are rising even when foreign universities haven't raised fees, and why many parents today are watching currency charts like stock traders. We will also tell how this currency shock is reshaping choices, why some students are now turning away from the US and the UK, and why Europe and Asia are suddenly back on the map. Yes, the rupee has recovered a bit from its worst levels, but the question every parent is asking tonight is simple. Is this recovery enough, or is the worst still priced into our children's education? This is not just a story about foreign exchange. This is a story about aspirations, about middle-class dreams, crossing borders, and about how global currency markets are now rewriting household budgets in India. Today on the Money Show special, the weak rupee versus strong dreams, the true cost of studying abroad. And for this, we are joined by a very special guest. I have Sonal Kapoor, Global Chief Business Officer at Prodigy Finance. I have Anant Ladda, founder, Invest Arch Fokal, and I have Dr. Subhash Goel, Chairman of STIC Travel Group and Indian Chamber of Commerce Aviation Tourism Expert Committee. Good evening and welcome all three of you, and definitely this is going to be a very enlightening show for all those parents who have their kids abroad or maybe planning to send their kids abroad for education. So let me just come to you first, Sonal. When the rupee fell near or even went above 90, what was the first visible impact you saw on Indian borrowers globally?
I think, the biggest impact is more emotional trauma. And I think the reality hits later a little bit. Because what ends up happening is as soon as INR depreciates, right? And every depreciation hits you because the living expense, which is your monthly expense that you pay out of your pocket for basic things like food, rent, travel, car ride, movie night with your friends, all of that suddenly starts becoming much more expensive. And that is what starts impacting you suddenly. You try to retract, but you go like, this is too expensive. I don't have the money. I didn't budget for it. I didn't plan for it. And therefore, where should I get it? You start calling back home. And that creates another round of panic with your parents, unfortunately. So I guess the biggest impact is that you had never accounted for the depreciation dip in your monthly expenses. And that takes the first hit every time INR depreciates. It's true for every student that's studying in any part of the world. But that is the biggest emotional trauma that they go through.
Let's get a reality check, and Dr. Subhash, maybe you can help us out here. Are you seeing a decline in student travel booking due to rising dollar or pound cost? Which countries have shown the biggest drop and which are gaining because of currency pressure?
The biggest drop we have seen is from the United States because of the visa issues.
Okay.
And the biggest gain is Australia because Australian education is English medium. But students are now, apart from UK, they are looking at Singapore, they are looking at a lot of other destinations where they go for. Even, now I was reading that in Russia, also they're doing some medical programs in English because earlier in Ukraine there were about 15 to 20,000 Indian students. So in some of these East European countries where the cost of living is much better and where the depreciation of the rupee does not affect so much. But I have some suggestions for the parents as well as the students. When they take an educational loan, they should try to take a loan from the country where the student is going. There are a lot of Indian banks who have international correspondents, or who are foreign-based banks in India. They can give you a dollar or a pound loan in their local currency. So if you have taken an educational loan in their local currency, then you don't suffer that much. But if you are taking the loan in Indian rupees, then my suggestion would be that you can, through a finance broker, you can contract or hedge the dollar at a particular rate, and then you don't get affected by the fall of the Indian rupee or the fluctuations. Another thing that we suggest in our travel company, a lot of students come and we give them, foreign exchange travel cards. Now, with these travel cards, they have the amount fixed. For example, if the parents put a card for, let us say, uh, $2,000, so the student can spend $10, $5, $3 on various, travel things, and that can also be very effective.
I
Another
think,
suggestion we give
sure,
to students,
sure,
there is a
okay.
UNESCO endorsed international student ID card,
Right.
which is recognized in more than 100 countries. And some of these banks, like Axis Bank and other banks, have tied up with this card. And this card can give huge discounts to students, whether they are movies, whether they are theaters, whether they are even buses, whether, for example, in UK, on the train also, and on the underground also, you get discounts on these cards. Another important card that a student should buy is the youth hostels card. So if they are traveling within the country, for example, America is a big country, or in Europe they are traveling. So everywhere there are youth hostels. And with the youth hostel card, you can have a lot of savings. And
Come to that bit in a
lastly, very
we'll
important
come
is,
back to that bit also, because definitely savings and having the right kind of strategy is a very crucial aspect of this discussion. But then, just to get the lay of the land, Anant, I'll come to you again, because yes, we are talking about taking the loans from the right kind of country and having various other options, but I just want your help, to analyze this particular situation and this particular cost. How dangerous is it for the middle class families to ignore currency risk while planning education? We are talking about, Anand, we are talking about parents who rely fully on loans, okay? And this is the time when they cannot afford any financial recklessness, and currency movement is something which is beyond their control, Anand.
Very true, ma'am. Firstly, thank you so much for having me on the show. Always fun and in discussing with you about important topics. See, when we talk about middle class, no, they give priority to two important things. First is education. Second is health. So we all know that education is one of the most important thing for a middle class. When they spend on education, they spend big amount. And when we see that rupee is depreciating 3 to 5% per annum in recent past, it becomes additional cost for each and every middle class, each and every person who has a dream to have education from a foreign university, each and every student, each and every parent who is planning out there, their budget goes for a toss. So it's a big confusion, or it's a big cost which they have to handle. So there is a small hack which I always say: whenever you are planning for important goals of your life, always have additional 20 to 25% uh, in the initial amount only. Always plan for 25% extra, because you never know what happens, and you never know what extra cost might come. For example, this rupee depreciation is one of the extra cost which we were not expecting in the recent past, and I am now expecting that in the near future also. Although today rupee has bounced, but since India is having high inflation as compared to the countries with whom we are dealing, I think this rupee depreciation is there to stay, and we need to plan it in advance, and we need to plan it very smartly.
And the financial planning, which is the reason why we always say that you need to have a hands-on approach as far as these important financial goals are concerned. But then, Sonal, let's also, decode what Dr. Subhash also was explaining earlier, just to get a reality check from you. Is there a clear shift from rupee loans to dollar-denominated loans after the rupee slide? I mean, if I just want to understand, the ground reality, can students lock in exchange rates or hedge their loan exposure in a practical way, Sonal?
Yes, it is true. It is true that the students are looking forward to more USD loans or GBP loans or Euro loans because it does make life a little bit more simpler for them. And like Anant was talking about it, they're able to plan better. So your tuition fee is going to be, for instance, $15,000. You need living expenses of about $1,000 every month, and it allows you to lock in the amount that you need. It also allows you to then understand how much will you actually spend duration of the course, and then depending on the situation after the course, if you land a job, then how do you actually have to pay it, right? So it is true that the demand is shifting from INR to foreign currency backed loans. um, it is also true at the same time that India is majorly a middle class economy. Therefore, parents and students continue to be in a stage where they're trying their best to understand the options that are available to them. So, from the perspective of the students and the parents who actually, students who are still young, parents who are, still exploring the best way to support their students, kids, they are not very fully aware of the options that they have where they can actually lock in rates effectively to safeguard the investment that they're making in students' education. So, there are options available, it is true. Is it very widely used yet? The answer to that is no. Instead of that, the best option for them seems to be pivoting towards USD or GBP or Euro denominated loans, because there is an easy availability of those, and they tend to be, in a long term, they tend to be cheaper than the INR backed loans because they usually are inclusive of all costs. And that is how it is playing out in the market at this point in time.
Time for a short break, but we'll be back. You might just want to continue on that point that you were referring to earlier. And also, one more question to you. Do universities abroad understand the currency stress Indian families are facing right now? Dr. Subhash?
No, I couldn't get you because there
Sure.
was
So I
some
was
glitch
telling
in
you
the.
that you can complete
you
your
repeat?
earlier answer where you were giving options of how students should be maintaining different cards, in order to save cost and expenses. And adding to that answer, one more question I was asking you, do universities abroad understand the currency stress Indian families are facing?
I'm sure they do understand,
Okay.
but right now, there's a big opportunity for foreign universities to set up campuses in India, particularly American universities. For example, uh, ISB, which is in Hyderabad. My daughter did her MBA from there. Earlier, she was planning to go abroad, and her degree has been signed by Wharton, Kellogg, and London Business School, her MBA degree. So, similarly, I think MIT and many universities have tied up with foreign campuses where you only go for giving the exam, or you only go for a short period. Rest, the same education with the same professors is done here. But in India, there is a psychological, advantage of people, if they have done their degree abroad, and educating themselves abroad itself is an experience. And that is becoming more and more challenging with the depreciation of the rupee. And mainly, the depreciation has taken place because of the tariffs, and our exports to USA have gone down and the dollar has become stronger. But I'm sure once this thing happens, uh, some negotiations on the trade deal are there, the rupee will again bounce back, and with RBI intervention, there will be some corrections. But at the same time, I think students and their parents must hedge the rupee, and must And as mentioned earlier, that foreign loans, the interest rate on foreign loans is also a little less compared to the INR loans that are taking place in India. So I feel, and there are these various cards, some banks cards also, which like Thomas Cook has foreign cards which has some discounts, and you can lock in the dollars or the pounds that you're paying.
Sure, sure. All right. So, Anant, I would just request you to, elaborate this answer in a much more practical way, in a realistic way. Like, for example, if a family earns almost 1 lakh a month, what is the maximum safe EMI for a foreign education loan today? A dollar denominated or other currency denominated, if at all one wants to go for it. What's the process? How can you take us through in a practical way, realistic way?
A very interesting question. I think there are three important rules which we need to follow in a very crisp manner. I'll try and explain it. First, your total EMI of house loan, maybe car loan, and education loan combined should never be above 50, max to max 55% of your monthly salary. Otherwise, your finances will go on for a toss. Second important rule which you can follow is your EMI for education should never cross 25-27% of your monthly income. Otherwise, you will have to compromise at one or the other places. And final important point is while taking loan, do ensure that you consider taking loan from private banks versus public banks. You compare your interest rates properly and you do your study. At times, we are in a hurry and we don't study properly. We are talking about international loans. I still know a lot of people and a lot of middle class people who are not even comparing interest rates and facilities available at different banks. Also, right now, we all are using new income tax rule. But if any one of us is using old income tax regime, then we even get deduction of the interest rates which we are paying the education loan. So properly study, do your study in advance. Probably if you're planning or if your kid is planning to go abroad, probably 1 year down the line, you should start exploring your options right now. Right now is the perfect time and you need to plan it accordingly. If you are looking out for investment options, I think only two investment options which we have, which will take care of rupee depreciation. First is gold, because India is net gold importing country. So whatever depreciation is there in currency is already taken care by investing in gold. Gold you can invest via ETF if you have a demat. If you don't have a demat and want to do without demat, you can use gold mutual funds, gold fund of funds, which we know. And second option is investing in international markets. But especially while investing in international market, you should understand that investing in equity market has its own fluctuations, has its own risk. You should minimum be planning in advance, and then only you should try and explore these options.
Exactly. Now let's shift the conversation towards finding out the right kind of universities. And Sunil, I'll begin with you. US degrees still worth the premium now? Time to shift, time to relocate and look at new options? Sunil?
I think it's a very blanket question. It is true that US degrees in the past have been expensive, but again, the premium has been worth it. I think time will tell how much premium will hold, but the reality remains that US still holds the title of having the most prestigious universities in the world. If you're looking for a certain kind of quality education, you're looking for a certain kind of exit after you've pursued your post-graduation, your doctorate, US does continue to offer immense opportunities to the right kind of people. That said, any student and the parent must consider the return on education because it is the right thing to do, especially in a time if you're taking a loan and the finance is an integral part of it. For instance, if you're looking to go to US for a very good college, you might end up paying in INR terms, you might end up paying somewhere around 1 to 1.5 CR. It is an expensive degree. Therefore, it will take you a long time to repay the loan if you were to come back to India. If you go to Germany, for instance, which is why Germany is also really picking up now, most of the universities there are public. They will not charge you a lot of tuition fee. You only have to pay for your living expenses, which is almost like 1 to 1.5 lakh per month. And the degrees are 1.5 years in term. So it allows you to plan your finances better, but it's a low amount. Therefore, you're able to repay it easily, even if you have to come back to your home country. Again, UK, you will have to shell out anywhere between 40 to 50 lakhs. but the monthly expenses there again could be in the range of 2 lakh per month because it is an expensive country, right? So my biggest input to this conversation would be, when you are looking to pursue an education abroad and you are supporting your child on side for it, please do consider what does the return on equity for that kind of education look like. I understand that the market is up and down, it's moving, it's changing continuously, but education is for a long-term investment purpose. You study and you bear the fruit of it for a lot of years to come. Therefore, you should understand what your finances are today. If I were to put in this money over the next 2 years in these kind of systems and these kind of tuition fee, can I support the living expenses? What is the kind of return I will get in future? And then make a decision for yourself. So is US going to be a tough market to crack in 2026? For sure, yes. I think there is bound to be conversations whether it's worth the premium or not. But at the same time, it does provide you quality that necessarily is not available at all places. So it's going to be a very, very tough challenge for students and their parents to decide on.
Same question to you.
See, I think this is a subjective question, and we need to take a look at the perspectives. For example, if someone is looking out to do a startup or do a business or do a profession, probably risk-reward ratio won't match. But if someone is into a job and specifically going for a postgrad, probably it will make more sense for him, specifically if he or she is willing to stay abroad, earn something abroad, and then come back to India. Probably it might make some sense. So we need to look at the pointers which we have to take care of, and it's a very personalized decision specifically for job people who looking out for job. And as far as I understand, especially for postgrad, it do make sense still.
So yes, you were right. This is going to be very perspective, and each to each its own. One needs to strategize itself really well. So I think this conversation, this discussion can really go on, but then I'm time up on the show today. Thank you so much, all three of you, for taking your time out and helping our viewers really decide the right kind of strategy for a very crucial goal of theirs. Thank you so much.
Thank you.
That's it on the Money Show, but then you stay tuned.